but this is a high probability. So my traders are always taught out on the whale complete. Your day or your play with this is over. So we're looking at a 5-minute chart, guys, here of Boeing, which means that every single bar you see, green or red, represents 5 minutes of trading. You have 2 dominant moving averages on this chart. These are the 2 moving averages that I encourage that every trader uses, no matter what time frame or asset or market you're trading. The 20-period simple moving average combined with the 200-period moving average, these 2 moving averages operate as a very unique and powerful buddy system. Whenever you're using a moving average system, you must have a shorter moving average in conjunction. You use a shorter moving average in conjunction with a larger moving average. To have 2 really short ones is really to defeat the purpose. You want a shorter one and a longer one. The 200 is our longer one. The 20 is our shorter one. All right, now, one of the things I want to use Boeing to point out with is that let's look at the first 5 minutes of Boeing's trading today. Look at how powerful this bar is. I call this, my traders and I call this an elephant bar. It's powerful, it's tall. The vast majority of the bar's range is green. It has some tails on the little wicks on the top of the bar, on the bottom of the bar, but for the most part, that bar is fat and juicy green. These fat, juicy green bars are called bull elephant bars. The fat, juicy red bars are called bear elephant bars or negative elephant bars. Okay, so the first 5 minutes of trading here in Boeing, we have a very fat, solid, beautiful elephant bar. Now, there's something interesting I need to point out to you. I want you, in conjunction with the moving averages, if you look at this first bar, notice that it is above the 20-period moving average and above the 200-period moving average. Now, this is critical. We have power elephant above the 20 and the 200. What we also have is, if we look to the left of this elephant bar, we have clear air. Now, listen to this combination. We have strength, boom, above the 20 and above the 200. So we're above the key 2 moving averages, okay? If we were to have weakness above the moving averages, we'd have a conflict scenario. We'd be above positive territory, but weak bar. No, we don't want conflict. We want everything in sync. Powerful bar, as you can see, above in positive territory, the 20 and the 200. And if we look to the immediate left, there's clear air. There's no obstruction. There's no price right next to Boeing interfering with anything. It's as if this bar, take a look once again, it's as if this bar is a skyscraper that is tall that is taller than all the buildings to the left of it, the recent left. We don't have to go back days or weeks, just the recent left. We want clear air, the recent left. This gives the stock the ability to continue to flow. Now, once we have this scenario, the general assumption is that any drift down into the strength of that first bar, if the pullback into that bar's range is gradual, not a collapse into the bar's range, but a gradual drift into that power range, that drift, that pullback, that dip is buyable. I'm going to explain to you why. Power bars, and I should use a different color here, power bars shoot their power or their forced field, they shoot their power to the right. Now, this power being shot to the right serves as a cushion or a trampoline or an area of price support, so that whenever a stock tries to penetrate the layers of support at It's very difficult to break through all the layers. And that support zone, if you will, my traders know it as the gift zone. This gift zone usually catapults the stock back to the upside. This fat, giant green bar that's above the moving averages with nothing obstructing its path to the left, okay, will shoot its supportive power to the right. And so anytime a stock has given us this first bar and begins to drift in the zone, we look to buy that decline. We're not afraid of the decline into the power as long as we have this scenario. Now, one other thing I want to point out to you. Notice that the 200 period moving average is underneath Boeing's activity here. This is very interesting. I told you that fat green bars shoot their supportive power to the right, and you should not be worried about dips into that force field, into that gift zone. But there's something else. The 200 period moving average, if it happens to be beneath this phenomena, right? The 200 shoots its power, supportive power, to the upside. So you've got a force field shooting upward, creating this interlocked net of support. You understand? Now, if that 200 was way below, its supportive power would not reach this zone. But the 200 here is not that far away. So its power that it's shooting upward is coming into that zone, creating a double layer of support, which creates even a lower odds of a pullback being able to get through this double mesh of support before boing, bouncing out of it. Now, in this scenario, we did not get Boeing dipping, but we have a second fat elephant bar. This is elephant bar number 2, all right? I told you these elephant bars shoot their supportive power to the right. Now, the 200 is a little too far away to have an effect here. So we don't have that double mesh of support. So as we get further away from the 200, all right, we lose the 200's help. Okay, we do have the bars help. So now watch, after this fat, giant, red elephant, green elephant bar, you get a gradual drift back into the range, into that range of support. And you can see the stock struggling to get through those layers of support, and boom, we move to a new high on the day. Now, when you get these two elephant bars back to back, I tell my traders that you can actually join the elephant bars together in your mind and assume that it's actually one elephant bar that was sliced in half, but they must be both solid and back to back. And so by doing this, you get a clearer view of what you're dealing with. This pullback, this whole movement is shooting its power to the right. Now, as long as that pullback does not break through, let me get a different color here. I'm going to show you this. Watch this. As long as it doesn't violate the halfway mark of this powerful elephant 2-bar move, the pullback is cool. The pullback is okay. That pullback, if it were to break down significantly below the 50%, we're dealing with a scenario where too many layers of support broke through. This is not right. This pullback is questionable. So as long as our pullbacks stay in the upper 50% of power, we're good to buy those pullbacks. Now, my traders are taught that this is called this movement here, this whole movement up, pullback, new high, is called whale complete. We are whale hunters. Once whales are complete, the nature of the stock changes. Look at how once the new high whale was complete, look at the nature of the stock change. Not all the time, but this is a high probability. So my traders are always taught out on the whale complete. Your day or your play with this is over. Can you potentially look for a new buy opportunity later? Yes, but right now it's over. Okay, whale completes, over, done. The nature of stocks change after whale completes. Okay, let's move to the next one. 38 years doing this, and still the hairs on the back of my neck go up. Crazy, crazy. Okay, let's do this. What am I doing here? Let's move to the next one here. Chevron, another. I've chosen a 5 minute, and guys, look, it doesn't matter whether you're trading a 2 minute, 5 minute, a daily, a weekly. I don't care. This is a universal concept, and I don't care whether you're trading stocks, options, bonds, futures, cryptocurrencies. It doesn't matter. Every concept I teach is universal across all markets, across all time frames. All right. If it's not universal, I don't teach it. All right. Now take a look at Chevron. Now, the concept I want to bring into play now is just like we saw with Boeing. Chevron has gapped up in the morning here. Let me point to it very quickly. Chevron has gapped up here. Now take a look. Its movement, its first two bars have produced two consecutive green bars in a row. Remember, I told you if you get consecutive bars, you can look at that as one movement. Let's look at that as one movement. Okay, we're going to take the bars and draw them together. All right. Now, this is one movement. Now, we have the scenario that we're looking for. We're above the 20 and the 200. That's key. We look to the left. There's no prior price activity in recent history that's obstructing or interfering with the stock's flow. So we've got clear sailing to the left. Okay, clear sailing above. Why? Because we're above the moving averages. There's no moving averages that are sitting up there like clouds or ceilings. So our moving averages are under us. Okay, so we've got clear sailing above and clear sailing to the left. Remember, that's a very important key, which means that now we have strength in the right position with nothing obstructing to the left or above. Pullbacks, I'm not going to be afraid of. Now, some people will say, but Oliver, this pullback looked pretty deep. Here's what I need you to do. Whenever your stock gaps, I need you to pretend as if the stock did not gap. We must fill in the gaps. So here was yesterday's closing price. Here's the gap. We have to pretend as if from yesterday's closing price, this stock traded up there. It didn't jump up there. It didn't leap up there. It traded up there. Now join this together and you can see that pullback has stayed in the upper 50%. We are good in the green. This pullback's a viable pullback. Remember, power shoots a supportive force field to the right. Our 200 shoots its power or influence to the up, creating that double mesh area of support here. You can't be afraid of that zone. So many traders get knocked out of their trades not knowing when a pullback is. Get more of this. Buy this. Don't let this pullback make you scared. You are being offered a gift. The house that you wanted, that $1 million house that you wanted, is now $800,000, and nothing's changed about the house. That's not a problem. That's a gift. All right. Your stock that you see that's very powerful just got cheaper for you to buy. You need less US dollars to buy it. That's a good thing. All right. All right. So let's move on. Okay. This pullback in Chevron, the subsequent pullback in Chevron here, guys, this is cool. This pullback is buyable as well. Now, this is getting into a different topic, but the turn happens right at the 20-period moving average. Now, remember, we're supposed to join that gap. Now, if we want to combine the whole move up, we do it like this. This is what's happened in Chevron from the open. Now, let's combine the whole move and pretend like that's just one giant slanted bar to the upside. I'm into this combining bars to get a clearer picture of the full fluid move. Do you understand? This is the full fluid move from start to finish before the pullback. Now cut this in half. Always cut your items in half. We need to do that. Cut that in half. Top 50%, bottom 50%. Is this pullback in the top 50%? Yes. Did it break our 20-period moving average? No. Boom! There's your play. You've got to know when these pullbacks are buyable and not a reason to get scared. Don't let bigger money shake your valuable jewels from you. And this happens all the time, okay? You get your jewels shaken from you. And this is not a good thing. All right, now I showed you what works on the upside. Let's look at the opposite scenario to the downside, my favorite. I love playing markets to the downside, actually. All right, so Coca-Cola, right? We have the first 5-minute bar of the day. Look, now let's do everything in reverse. We've got not a power bar up. We got a power bar down. Boom! Right? We got a power fat red bar down. That fat red bar is below the moving averages. We're below the 200. We're below the 20-period moving average. That means we've got a match. We're in negative territory below these two moving averages, and we've got a negative bar. We've got everything going for us. Do you understand this? Okay? So, all right, my traders would be taught to dive into this bar. Just dive into it. Our stop is above the high of the bar. My traders are already into this. Now, here's the thing. See the stock start to move up? My traders are not scared of this. Why? Why are they not scared? They're seeing their little small P&L start to disappear, get less, right? But they're like, oh my God. Oh, most traders are like, oh my God, I had $300. Now it's 200. Now it's 100. Now it's 50. What do I do? No, nothing. Why? We're going to use this to add, if anything, because remember what I told you, fat bars shoot their power to the right. So negative power is being shot to the right. Now, remember the 200? The 200, when the stock's above it, shoots its power to the upside. Oh, no. But now we're below. So the 200 is shooting its power to the downside, creating this double mesh area of resistance above. The stock's going to have a hard time, right, getting through that double layer of resistance. Boom! You do not want to be afraid of bounces into that area. You do not want these little bounces to shake the jewels from you. All right? Pullbacks into this zone are gifts. I'm going to get bigger. I'm going to fill up the tent a little bit more if I get a movement into this zone, because the odds of a new low are extraordinarily high. Now, let's take the secondary move, right? Look at this move. You see, remember I told you can join the move together? Now, remember I told you cut every move in half. Look, cut it in half. Top 50%, bottom 50%. Don't be afraid of these moves up. Remember, this is shooting its power to the right. As long as this thing really stays in the bottom 50%, you're okay. And then look. Guys, I know there's a percentage of you watching me today. You're taking notes, you're taking this in, and just this one concept I'm explaining to you, just this one, going to change the way you see markets and play markets for the rest of your life. Watch. Every single time I speak, there's a percentage who take this and run with it. I want it to be you. All right, let's go. Let's do the next thing. All right, Oxy guys, look, here's another stock today very quickly. Look at this. Remember I told you to fill the gap in. All right, look at that little dip down to the downside there. Don't be afraid of that. There's your 50% mark. Boom. Now let's take this whole move right here, right? And let's join it together. Let's slant it on its side here. All right, let's split it in half. And this pullback stays in the upper half. Boom. Now remember, as soon as you get something like that new high, the nature of your stock changes. That's your whale complete. Guys, take this and run with it. I can show you example after example after example, guys. Here's Qualcomm. Look at the pullback. Remember, some people say, well, Olive, some people would be afraid of this drop here. But why? When I tell you join the gap, pretend it's not a gap, fill the gap in, then split that in half. As long as the pullback stays in the upper 50%, you shouldn't be scared. Boom. All right, I love it. I love it. I love it.